morning. Ira Epstein with your morning flash update, and this update is for Thursday, and we're at the 2nd of February, 2023, time right now about 8:30 a.m. Central Time, and as you can see, a mixed picture in the stock market, but the interesting part is, Metaverse, obviously, owned by who? Well, we know it's the old Facebook. So Meta, up about 20% this morning, and that's because they're shifting their focus. The other events of the day, if you're watching the European Central Bank announcement and the Bank of England, both currencies a bit lower, as both raised interest rates by 50 basis points, but the most compelling argument was Miss Lagarde, who I can't tell you what a big fan of hers I am. She came out and said, hey, folks, I'm going to tell you, we're going to go another 50 basis point in March. Then we'll take a look at the data and see where we're at. What a refreshing viewpoint, and so different than Fed Chair Powell yesterday, who I think really misstepped. And I read reviews all morning long. People think the same thing that I do, but it has sent the stock market into a tizzy to the upside in many cases. And the reason is, when you put it all together, central bank after central bank is starting to really say that they are getting to the point where interest rate hikes are going to soon be a thing of the past. That doesn't mean they're going to drop their rates, and that is what the market's getting wrong. It means they're going to stop raising them. So I'm guessing anywhere between the March hikes to June, somewhere in there, major banks are going to go into a pause. How long they stay will be data dependent again, and that's what this market seems to be biting onto, and I get that. Now, they're going to have to prove that things get worse. If you saw some of today's data, it doesn't jive with the banks just all of a sudden going and reversing course. Let me show you what I mean by that. Challenger Gray, this is good news. All of a sudden, employers announced 102,000, nearly 103,000 of cuts in January. That's a 136% increase from the big cuts that we saw in December. Only 43,000 then, and that was the shocker. If you look at jobless claims, they fell again. This is the problem for the Fed here. They're down to 183,000. And then what I was counting on, and I think the market, the continuing claims. No, folks, what's going is they're falling too. So as we said, you lose a job on this side and you're picking it up, that same person over here, and they're not even staying on the claims roll. Then we get to the fourth quarter prelim non-farm productivity. Look at what's going on. The same worker producing more. Now it's up to quarter over quarter, 3%. And the labor costs non-farm up 1.1%. They were expected up 1.5%. Not the pressure you see there. So this is just so interesting. The labor is going to be what we call the super core problem, and that's not the term I gave it. The Fed Chair Powell did. He named it that. And that is the service sector labor costs. Big problem for the Fed. I don't know that that can be beaten at this point in time. When we're going into the spring and then the summer, and outdoor services are going to be in demand and people are going to get jobs everywhere for that. Got to keep that in the back of your mind. Bank of England and, as I said, the European Central Bank, both half-point hikes, very important. Very different press conferences, too. I love Miss Lagarde. I think she's the best and the best spoken and speaks straight talk, and I like that very much. So when I look at it all, what am I going to do? Well, I can tell you, I think I'm going to sit down now today and do a special video report on gasoline prices. I've said that as we approach spring, we're not there, we're February 2nd. As we approach, I expect we will have made a bottom in gasoline, and it could surprise you in the spring, the strength it's going to see. I could have done this on jet fuel. New York's got a huge issue with that. You can see the grain markets don't back off at all. Yet today, you're looking at bonds and notes. What are they doing? They are, at this point in time, slipping in yield. You're still up in Bitcoin, back up towards the recent highs there. And all the metals came alive in a monster way. You've got a big break. You got $18 off the high in the gold this morning. But remember that 1985 area that I've shown you at so many times at the end of the day, that's your resistance point, and the market is respecting it. So as I said, I'm going to do a special report today on gasoline. It'll be on the website. I will send an email to everybody in my mailing list once I get it done. If you're not on the list, what you want to do is go to our website, or you can actually click up here at any point. It'll take you there for our free offer. Sign up for one and we'll get you into the system so that you're able to at least get to where this report is. And I'll probably do a couple of reports between now and middle of next week. So I'm going to be putting these out in fast and furious pace on different markets that I'm choosing. I wanted to get through the all-important area. Tomorrow's non-farms payroll. That will get me going on another series of reports over the weekend. So it's going to be fun for me. I've been looking to do this and needed a reason, and I've got it. Again, www.iraepstein.com. That's the place to go. I'll see you at the end of the day. Have a good one.